So in this class today, we are actually taking a question that will help us understand how to prepare an income statement for cooperatives, that's cooperative societies. So basically, you can have cooperative organizations, coming under another organization. For instance, we can have staff of a particular organization come together to form, a cooperative, okay, to promote an object, which usually is more like the welfare of the cooperators or the members. Okay, so you don't call them members, you call them cooperators. For instance, you have MTN Multi-Purpose Cooperative Society. I think Nigerian Police Force also has a cooperative society, and then Fountain Heights, I know, have a cooperative society. So basically, that's sort of what model. Okay, although we have some companies as well established basically for cooperative activities basically, but the idea is that whichever way, whether you operate as non-for-profit making organization or as a company proper, so long as you have what we call the right to form a company or form an organization, and you have fulfilled all requirements to run the business in that cooperative model. Remember, you can go to jadisconsulting.com to take your classes. It's absolutely free. No one is taking any money from you. You're not making any payment. Go to categories, select your topic of interest, and then proceed to the course, press play, and then take your class. If you have questions, you can reach me on the numbers displayed, okay, and then I'm there to reply with the right answers. Remember, you can make your free donations by supporting us. Okay, so if you want to do that, you can reach me to let me know how you want to be of help, or we can also let you know how you can be of help to us, or you can just pay into the account numbers displayed. You can as well get my textbook. Okay, it's 7,000 naira per copy, or $12 US. You can sponsor copies that will distribute to students for free. That's 6,500 naira per copy, or 11.5 US dollars. So let's quickly take the question. You have been asked to prepare an income statement for XYZ cooperatives for the year ended 31st July 2016. A trial balance as at that date is shown below. So we have interest charge on members' borrowings, purchase of groceries shared to members, property, plant and equipment at cost, property, plant and equipment accumulated depreciation. We have grocery inventories as at 1st January 2016, interest paid on loan from DAZI MFB, that's Microfinance Bank, I guess, and then donation received from the Legends brand, groceries distribution expenses, administrative expenses, salaries and wages, other relevant expenses. Then we have grant received from local government, debtor members, and then we have cash at bank. We have trade payables, members accumulated fund, members yearly bonus, income from short-term investments, sales of groceries to members, and then we have the trial balance agreeing there. Then they say additional information: a member borrowed 3 million at 10% interest payable in full. The interest charge has been omitted from the books. 2. Closing inventory of groceries value was 2,100,000. Then we have 3. Accrued salaries amounted to 3 million. 4. Depreciate property, plant and equipment for the year was charged at 10% using straight line. Depreciation of property, plant and equipment for the year was charged at 10% using straight line method. Then the next one there, we have prepaid distribution expenses amounted to 50,000 naira at 31st January 2016. So that's the question. Then we have to prepare income statement for the cooperative. Like I said, what is a cooperative society? Like I said, before you even prepare the account at all, you must understand how the business operates, and you must know where the monies are. So when we say a cooperative society, okay, what it means is you have individuals, okay, with similar interests coming together, okay, to form an organization where they can promote their welfare. Basically, what their intents are, or an object as agreed by all of them. So we can have it from specific intents to multi-purpose intents. Okay, so the idea here is that these guys are coming together, okay, to find a way to help their own welfare. So typically what happens in cooperative society is that you have members contributing to a common fund, okay, out of which members get loans, okay, after an agreed period, and then they pay back at an agreed interest. Sometimes the cooperative can invest in some other items to get money that will be distributed to members in form of yearly bonus. Sometimes they even buy things and then sell to themselves, okay, to make money for the cooperative. That is, members get the products and then sell on their own, and then they pay the cooperative, over a particular period of time, okay, at an agreed interest. So whichever purpose, whether specific or multi, that the cooperative is trying towards, help the members or cooperators with, okay, the idea is that we must understand basically how cooperatives make their money. So technically, their gross earnings, okay, what we say gross earnings, that is, usually banks and other financial institutions use that word gross earnings, but we can say turnover or their incomes, okay. The income of a cooperative society surrounds around interest charged on members' loan. How do they give members? They can give member cash. Maybe Mr. A is a member of the cooperative society. If Mr. A gets, let's say, a loan of 10,000 naira, Mr. A is now asked to pay back the 10,000 over 6 months, or let's say over 10 months. Let's make it easy for us. Over 10 months. So that means every month he's paying 1,000 naira. Now, Mr. A can be asked to pay additional 1,000, which is 10% of the 10,000. So Mr. A will be paying, let's say, 1,100 naira every month. So in 10 months, 10,000 naira, okay, is giving them 11,000. So what it means is that Mr. A borrowed 10,000 from the cooperative and then paid back 11,000. So the income of the cooperative will be how much? 1,000 naira, because Mr. A borrowed money from the cooperative, and the cooperative is using the money to turn over another 1,000. So instead of paying back 10,000, Mr. A is paying back 11,000. So that's basically the areas where cooperatives make money. So if they don't give you cash, they can buy products. They buy products. When they buy products, they can buy maybe consumables and then sell to members. Okay, so members will now pay back over a particular period of time, usually at little interest. Okay, so the idea generally is to help members' welfare or help members with their businesses. Okay, you can have individuals dealing in a particular type of product. Maybe individuals dealing in woods. They'll come together, form a cooperative, find a way to get the product at a cheaper rate so that members can get it cheaper from from the cooperative. So it depends on the object of the cooperative. But the idea generally is that a cooperative society tries to make earnings from the loans given to members. They can get donations as well. Okay, they can get grants, they can get aids. Okay, they can do investments. They get interest on investment or income on investment, and that can also form part of their income. So aside from that, they can as well do some general expenses that all businesses do. They pay salaries, pay honorariums, do transportation, do distribution, any expense that normal business does. So the idea is that it's a business model, okay, that also surrounds your bookkeeping process and accounting procedures. Okay, but typically most cooperative societies operate as not for profit making organization. They operate as NPOs. Okay, so what it means is that they typically are concerned with promoting the object of the business or of the members or the cooperators. Okay, so even if you have a company operating that sort of business model, as long as it is registered and approved to operate that sort of model, okay, then you report it as a company. You report a company. Okay, so the idea generally is that you must understand where the money is being made. Okay, so let's look at this question and then quickly solve it. So we have XYZ cooperatives. So we have XYZ cooperatives. So we're preparing income statement, okay, for the year ended 31st December 2016. Okay, so they've given us, we have our notes. Okay, so they've given us the trial balance. At this level, I expect you to know how to prepare your accounts from your transaction to your ledgers to balancing the ledgers up to the point of preparing trial balance. If you don't know how to do that, you can take your class on jadosconsulting.com absolutely for free. Okay, so let's go. The first thing there, we can use earnings or we can use turnover as usual, but we must understand that the turnover of the business is the typical source of what revenue of the what business. Okay, if you're selling shoes, the typical revenue source is your shoes. Okay, but here, what is their turnover here? It has to be interest that you earn from the members' what loan. So we can use turnover, okay, and then we can use earnings. But let's use turnover so that we understand. So you can even use incomes. If you want to make it easy, you can just use incomes here. So that will be note 1. But we can still use turnover. There's no problem with that. So let's say note 1 now. Turnover, okay? Or what you call incomes. You can use turnover or you can use what? Incomes. So let's go to trial. What are the incomes there? Here I can see interest charged on members' borrowing. So we have interest charged. How much is that? I can see 65 million. But is there any additional information? They say a member borrowed 3 million at 10% interest payable in full. The interest charge has been omitted from the book. So we have interest charge here. Okay, interest charge here to be 65 million. Okay, now they say that what? A member borrowed 3 million at 10% interest payable in full. The interest has been omitted from the book. So we have 3 million times what? 10%, that's 10 over what? 100. So this will give us 300,000, I guess. Yeah, that's it. 300,000. So the interest on this 3 million is 300,000. They say it has been omitted from the book. So how do you record interest? Basically, follow your normal double entry principle. You gave a debtor, you gave a member loan. So what do? You credit cash, debit the what? Member. So we can say cash. Money is going out of cash. 3 million, right? And then we have what? Member, which represents the debtor here. We have what? 3 million. Now, the member is going to pay back with interest, which is 10%. So what's the interest here? The interest value here is 300,000. So that means what the member is owing will increase. So we say 300,000. That's the interest. So we now have our interest account. We have the debtor here, 300,000. So basically, the interest to be charged will increase by 300,000, and then we'll now debit our debtor 300,000. Or another way is, instead of taking it to debtor's member, we can do what we call accrued income on what? Interest. So that means that your accrued incomes are assets. If you remember your accruals, you can go to jadosconsulting.com to take your classes on what? on accrual. So accrued incomes are what? Are assets. So we can just say accrued, and then we say debtor, okay, interest. How much? 300,000. So that means it will not be here. You take it out of this place. But at the same, whichever way you look at it, your debtor is an asset. This will also be an asset. So at the end of the day, it will still increase your debtor anyway. Okay. So it's either you take it to the debtor account or you open an accrued interest account and put it there, which you can still write off to debtor account anyway. So typically, this is what we're trying to say. So we're saying that the interest charge will increase by 300,000. The interest charge will increase by 300,000. So we have 65,000 plus 300. Let's create some space here. So we can say 65,000 plus 300. That will be 65,300. So the next item there we have purchase of groceries shared to members. So that means the cooperative bought some inventory items and shared to members. Okay. Then we have property, plants and equipment. We have property and equipment, accumulated depreciation, grocery inventories. That's more like your normal buying and selling, your trading account there. We're going to need that here now. Excuse me. And we have interest paid on loan from DASI MFB. We have, I think that's an expense. We have donation received from the legends, branders, other income, grocery distribution expenses, administrative expense, salaries, other relevant expenses, grants received from local government. Okay. We have cash at bank, trade payables, members accumulated from members yearly bonus, income from short-term investment, sales of grocery to members. So basically, the turnover here is 65,000. 65,300. So we have costs of what? Sales. So what's your cost of sales there? So let's call it note 2. Okay. So we have costs of sales. Okay. So typically, what are those direct cost items? What are those, costs that have been incurred, okay, on the day-to-day running of the business? I think in terms of direct cost, since the basic revenue source there is interest on members' borrowing. So what are the direct costs relating to the interest on members' borrowings there? So from what I can see here, I can see interest paid on loan from DASI MFB. That's more like expenses, part of expense of cost of running the business. Okay, except of course they are telling that the money that was given to them was borrowed from the microfinance bank, and then we can assume that interest there is a direct cost item. Otherwise, let it form part of their admin and running expenses. So we have donation received, that have the other income, groceries and distribution admin. So basically, I cannot find what is it now? I can't find any direct expense or direct cost related to what? Interest charge. But I can see that there was what I call groceries, or what we call inventories or goods or stocks. I can see that they bought some stocks, and then out of it they distributed to members, and then what happened again? I can see what there. I can see opening stock. I can also see sales. So basically, they bought some groceries and distributed to members or sold to members. So we can take that as our cost of sales. What do we do? We have opening stock. That's basically your normal trading account. But then, if the business is not involved in trading, so typically we can assume that the cost of sales here, okay, will consist of what? Whatever direct cost that has been incurred in, borrowing money to members and then getting money back from them. But in this question, basically, you can say there's no such direct expense. So we can assume that the groceries that was purchased and sold to members should form part of the what? The cost of what? Sales. Okay, so we have what they call the cost of sales there. We have opening stock of what? Groceries. Okay, so what's the opening stock of groceries there? Opening of groceries there, I can see what's there? Groceries in like at 2006, I can see 3,200. So we say add what? Purchases. This is more your normal trading account. You can do that on jadisconsulting.com. So what's your purchases of groceries there? I can see purchase of groceries. I can see there 40,000. That's like 40 million basically. So we have 40,000. If you add, you have 0023 43,200. So is there any returns outward on groceries? Nothing like that. Okay. So no carry, nothing. So I can see closing stock of groceries here, 2,100. So we have closing stock of groceries there, 2,100. So we take that out. Just like a normal trading account, 3 minus 2 is 1, 41,100. So this will be your cost of goods sold. So we can say 41,000. So we take that out. We have 003. Okay, minus 1 here will be what? 2. 6 minus 1 here will be what? 4. What do we have here? 6. Oh, what are we saying? Yeah, that's 0 minus 0, 0 minus 0, 3 minus 1, 2, 5 minus 1 is 4, 6 minus 4 will be what? 2. So this will be your what? Your gross income or your gross what? Earnings, okay? So we now have what? Other income. So what are the other incomes? Let's call that note 3. Okay. So what are the other incomes? Note 3. Other incomes. So what are the other incomes in the question? Okay. I can see donations received from the Legend brands. So we have donations. Is there any information on donations? Is there any information on donations? No information on donations. No information on donations. So the next one there, I can see grants received from local governments. So we have grants. What's the value for donations? Donation according to the question is 800,000. So we have 800. What's the next one there? Grants 230,000. I can see 230. Okay. So what's the next one? What's the next one? I can see income from short-term investments. So let's call it investment income. 3,000. Let's put it there. 3,000. So what's the next income there? I see sales of groceries to members. So groceries sales. Groceries sales. So what do we have? 45,000. Now remember that in some instance, in reporting these grocery sales, it is possible for some accountants to make it part of your turnover here. Instead of putting as other income, they'll make it as part of your turnover here. There's nothing wrong with that. It still will give you the same end result. But the reason I'm doing this is because of the fact that the intent of the business, the order of the business is not surrounding, it's not around buying and selling. Because these are just other incomes. They do different. Cooperatives do different things to get money for the society. Okay, so if we are taking the grocery sales to be part of turnover here or incomes here, it will have given us the same end result or make it part of other income. So let's proceed. So that's it for sales of groceries. Okay. So what else? What else have we not taken there? Let's see. Any information on them? None. So that is all the income you have there. So let's add. What do we have there? What do we have there? We have 800 plus 230 plus 3,000 plus 45,000. We have 49,030. 49,000 and what? 30. So we can come here and say other income. 49,000 and what? 30. So we add up. We say we have 24,200, okay, plus 49 and 30. So I have here is 73,230. So this is your total gross what income or earnings. Okay, so okay, so this is it for it. Then the next one I will say what total what expenses, or let's call it total administrative and what running expenses. Let's call that note what 4. So let's go. Let's call this note what 4. So we'll call it administrative and what running what expense. Okay, so let's go. What are the items there? So what I can see here, I can see interest paid on loan from Dazi MFB. So we have interest on what loan. What do I have there? 300,000. So that's 300. So what's the next one there? I can see groceries distribution expense. So we have distribution what expense. So what is there any additional information there? Let's check. So don't. So I can see prepaid distribution expense amounted to what 50,000. Okay, remember your prepaid expenses. Okay, prepaid expenses are expenses that have been incurred, that are yet to be have been paid for but are yet to be incurred. What I'm saying is that the prepaid expense here represents any expense that you have not incurred or they are not due to be paid but you paid for them. So let's say rent, for instance. Instead of waiting till 2022, let's assume you paid rent for 2022. That's prepaid expense. Let's even assume that you paid for 2021 and now we are in February. If you're reporting February, you're expected to what account for, March upward as prepaid what rent. You get the idea? So you can take the class on prepaid expenses on jadosconsulting.com. That will explain further. So we have prepaid to be how much? 50,000. So what's the actual distribution cost here? Okay, we have 500,000. So that'll be 500,000 minus 50. That'll be 450,000. Okay, and then the next one there, administrative expense. So we have admin expense. Any information on admin expense? No information. So let's go. What's the admin expense there? Let's pick it. I have 9 million. So that'll be 9,000. What's the next one there? Salaries and wages. Salaries and what? Wages. So what is, we have 25 million. So what is the information on salaries and wages there? Accrued salaries, 3 million. Remember your accrued expenses. Accrued expenses are expenses that are due for payment but are yet to be paid. So you've incurred them or you've not paid for them as at the period of what? Reporting. Okay, you can check jadosconsulting.com, take your class on accrued expense or accruals in general. So we have 25 million plus 3 million. Okay, so we have 25,000 plus 3,000. So what do you have there? That'll be 28,000. The next one, other relevant expense, 10,000. Other relevant expense, 10,000. What's the next one there? Grant received, we've taken that as an income. Debtor members, that is an asset to be in the balance sheet. Cash at bank, asset, balance sheet. Trade payables, that's more like creditors, that's liability, balance sheet. Member accumulated fund, that's like capital or shareholders share capital, that's balance sheet. Okay, members yearly bonus. So we have yearly bonus. What's the yearly bonus there? I can see 40,500,000. That's 45. Any function on that? No. So what do you have there? 4,500. Okay. Income from investment. We've taken that already. Okay. Taken that already as an income. Sales of groceries. That I'm taking that already. So what have we not taken now? Depreciation on plant and machinery. Property, plant and equipment is what? 85 million. And they say we should depreciate that was straight line method on that at what? 10%. So depreciation on property, plant and what? Equipment. So that will be 10 over 100 times. How much is that? 85,000. So this cancels this cancels this. What do you have? 8,500. So any other item there? There's no other item. Is there any other item? There's no other item. Okay, taking interest, taking purchases, property, groceries, interest, taking that direction, taking that, taking this, taking everything. So let's go. What's total there? Total there now. I have 300 plus 450 plus 9, excuse me, 300 plus 450 plus 9,000 plus 28,000 plus 10,000 plus 40,500 plus 8,500. We have 96,750. What do you have? 96,750. So as you can see here, your total expense is more than your gross earnings. So what do we call this? As a non-profit making organization, you can call it what? Deficit. Okay, so we say surplus or deficit. So deficit is when your total expense is more than your income. So what do we have there? And this is 750 minus 73,230. So what do you have? 23,520 in brackets. This is what? A deficit. Okay, if you're reporting as a company or as a profit-making organization, you can call it loss. Okay, so this is basically what the question says we should prepare. But remember, you've been given a trial balance, and I can see some, asset liability items there. We can as well go ahead to prepare the statement of financial position, which generally we call balance sheet. But the question has not asked us to do that. But if you have questions regarding that, you can reach me on the numbers displayed on your screen. Okay, I'll be there to reply you with the right answer. So we can look at it together on how to prepare the balance sheet for a cooperative society. Okay, you have questions on this one as well. Okay, you can as well reach me on the number displayed or drop it in the comment section. I'll be there to reply you with the right answers. You can support us with your free will donations by paying to the account displayed, or order for my textbook or sponsor my textbook and distribute to students for free. Thank you.